What's up, you guys? It's your girl Alexandria B, back at it with our Sunday swing trade watch list of the week. After the last 3 weeks of major earnings reports that are beating expectations, but the price is dropping due to guidance, missing expectations, but the price is rising due to headlines. I have never been so thankful for a relaxed week on the economic calendar side and on the earnings side for the most part. This week we have wholesale inventories Wednesday, jobless claims Thursday, and consumer sentiment on Friday. I'm chilling. I'm here for it. So let's go ahead and hop into our charts. We'll start off with the futures, of course, with ES, which is the futures ticker for the S&P 500. So I like what I see here. I like what I see. So the yellow is my 20 MA and the 50 is my blue. I like to use the simple moving average because the exponential moving average is going to adjust to recent price movement quicker than what the simple moving average is. That's why they adjusted the calculation. So when I'm looking up top, I don't want anything that's adjusting to recent price change too quickly. So I like to use the SMA for those who wonder. So clearly right here we have resistance at this 50, about 51.71. I'm looking to see when the market opens back up this evening, if we'll gap up over that level and be able to hold it as support this week. If we do pull back into the 20 MA, which is around 51.21, I'm obviously looking to see if we'll be able to hold that as support. I hope that we don't return down back here to see 50.63, okay? Because the bulls did lose that island bottom gap post FOMC. They did let the bears go on and get that closed back down below. But ultimately, we did make a higher low. So, please, Lord, please break over the 50 MA. Please, please, please. I'm not ready yet. I'm not ready to see the red yet, okay? So when we check out NQ, we're seeing the same setup. Now, NQ gained about 1.5% last week, where ES gained about 0.5%, and the Dow gained 1.25%. But 1.75%. We'll check that out. But again, you can see here we have the same beautiful setup. I'd love to see a hold above 18. I like whole numbers. So the 50 MA is at 18,088. I'm going to say 18,100. I like the whole number. I'd like to see us be able to break above that and hold it as support. But where this 20 MA is around 17,812. Hey. So let me go ahead and put those for you here. Because someone told me that they screenshot my charts. You could just put the level on your chart, but here, girl, I got you. Anything for the fam. All right. So this range here, please just let us hold it. It's okay. We like a nice little pullback to start the week off. If we do retrace down here toward the 17,800, I'm fine with that as long as we hold it for support and we can break above this 18,100 and close the week above that. When we look at the Dow, same setup, my beauties, same setup, same setups. So on the Dow, I'd like to see a break above the daily 50 MA as well. Now I'm going to go back to ES really quickly since I have this one charted to the T. One thing that I want to show y'all that I'm loving is that RSI and MACD are starting to pick up bullish momentum again. Amen. We have RSI peaking ever so slightly above 50. So there's three numbers that we want to pay attention to on the RSI. Typically, you'll hear people quote the 30 and they'll say that's oversold, and the 70 and that's overbought. True. But what about in between? And that's the 50. So that's really where the confirmation comes in, is when you see RSI trend above 50 or below 50 if you're looking for bearish confirmation. So on Friday, we got that little peak above it. And let's look at the weekly. Let's look at the weekly. It's pulling back up too. So last week we ended off on when we were looking at the watch list and we saw this bullish harami inside bar, however you want to call it, that held the 20 MA, and we were watching. We wanted it to hold here where the 20 MA was, and it did. It reached this next level. Come on, man, give us this push. Let's hold this daily 50 MA and give us this push back up towards all-time high. I will be ever so grateful and thankful for that. Amen. Before we get into this week's watch list, let's go ahead and do a follow through for last week's watch list because it's still in motion. A swing trade, a good, beautiful swing trade will last and run, I should say, more than 1 week. So if you missed your entry last week, that's okay. The trade's not over, all right? So let's start it off with Oracle. Oracle is the only one that gave me a little bit of a headache for me. Now, we did end up getting this pull back to the trend line, and I would have liked to have seen a positive change in price, but no ma'am. Last week opened, or the week prior opened at 116, and then last week closed at 115.80. I'm not a fan of that, so the same setup that we were looking at last week, it still provided beautiful day trades, and even a short swing, go back, and even a short swing trade could have been made, a calculated swing trade, I should say, when the market opens on Monday. And we got this negative change in price. And remember, we did want that pullback to the trend line. It didn't give us the same day. So that could have been a calculated overnight hold for a swing. And you see it trending on down here to the trend line, held it. And we're starting to get price moving back up. So the same levels, the same setup that we were looking at last week is what I'm looking at this week with Oracle. Now, Oracle, no, it could have done what it needed to do, but that's all right. We have Costco. Beautiful. We got that break out of there. Yes, 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 yes. Now, I did catch this on Thursday. It kept alerting because I set an alert on my trend line. And let's take a little break and I'm going to show y'all how you can set an alert on the trend line. When you click it and the toolbar pops up here, wherever it pops up on yours, when you click more, when you click the clock, or if you don't have the clock here, you click more and it would say add alert. You can hear, and I have mine when it was set to let me know every time a bar closed above the trend line on the daily. So as you see here, when you set an alert on a level that you drew, like a trend line or an indicator, something like that, it's going to set the alert for the timeline or the time frame that you set it on. So since I'm on the daily time frame right now, it's going to alert me when a candle closes above this trend line. So it did it all last week. Even though those were bearish candles, it was still closing above the trend line. So I just check. And on Tuesday, or Monday I did, I apologize. So then on Tuesday, hello, that was beautiful. I did see it towards the afternoon. I went ahead and entered. Then Wednesday we get this beautiful. So it's too close here to the zone that we marked off. It's too close to that. So I'm going to say at this point, you need to wait to see what price does at 754 to round up to a whole number, because it could reject there to pull back to retest the trend line. So if we pull up the averages, and I'm on the daily time frame right now, we see that it Tuesday just closed above the 50 and held it Wednesday. And if we go to the weekly, or Friday, and if we go to the weekly, there we go, holding that 20, right? So we just got that break out of the trend line, but I'd hold off and wait to see what it did at the 754. It's okay. Be late to the party. It's okay to be late to the party, I promise. So now we're going to go to Starbucks. Hey, I told y'all, Check the tape. Rerun the tape. I told y'all. Look for a pullback to the trend line. Did we even recognize that it had earnings this week? Because I was actually surprised when it did. Either I forgot or we didn't recognize that it had earnings, right? Hey, I said it broke this secondary trend line. We waiting to see if this pulls back on it. And we're just going to go ahead and go down to the hourly. So the technicals and the fact that Starbucks, like, their financials really ain't financial and how the financial should be financialing. All right. And y'all know I love me a good low volume pullback. Y'all know I love me a good old low volume pullback. Look at that, y'all. And then the volume came in when the drop came. Amen. So on Starbucks, it's going to do possibly a false pull up. It's in a range here of we'll just say 72 to 77. Just wait to see what price does on it. If it breaks above 77, okay, but I'd wait for it to find a high and see there. I'd play the secondary move, not the primary. Not quite sure if it'll make it back to 84. All right. If we go to the monthly to really just check this, y'all, it lost the monthly 100. It's held the monthly one. It's been since stick with me here. We're checking to see the last time it lost the monthly 100. That was in 2008. So, anything about their balance sheet, I would not be surprised if we do mosey our way on down here to see Starbucks around 50. We do need to see 62.50 first and possibly see it hold as support around there. And where I got 62.50 at is here, where we have previous resistance back in 2013. Insane. I kind of figured though, Starbucks has not been doing very well. Quite a few people said, heck no, we won't go. We don't want Starbucks no more. All right, so next up we have Target. Again, how could you ever trade against me in my analysis? How could you ever? It's a beautiful break of the trend line. We thought we saw it head and shoulders. Just perfectly played out. I mean, it followed these levels down wonderfully. And when it pulled back Thursday, I actually got stopped out, but at a minimal. And let me show you. So on Thursday, when it pulled back, I started to think, okay, well, this is a Morningstar pattern forming, right? We have the long bearish candle and then this bullish candle, but here's where I messed up. This was not technically a Morningstar pattern. Looked like it, but if it was a Morningstar pattern, this bullish spinning top would have gapped down below this bearish spinning top. So, ciao. When this opened up Friday, and then I got in for calls because it went back towards the 160 level. And when it started to reject a little bit, I was like, yeah, it's just a little pullback. Meanwhile, held on a little bit too long, but I took a 3% loss because it pulled back below the level and then closed here. Could have reversed the trade, but that's also known as revenge trading. It don't matter how you spin it. All right. So going into Target this week, I would say just because you saw Friday kind of like thank you out a little bit, kind of make you think it was going there. I would say you might as well, not even might as well, wait until the low of this week, okay? Don't let all this data on the daily fool you. Just wait to see a break below the low of this week, of last week, which is 155.80. Whole number, okay? So 155. Now, if we turn on our moving averages, well, let me go back here to the daily, actually. One thing that I want to say about chart patterns is that, like we said, we thought we saw one, wherever that sign is on the weekly. We thought that we saw a head and shoulder forming here on the daily, weekly time frame. And I understand why some people say that chart patterns, yeah, they don't do anything. Listen, there's all patterns, whether it's a candlestick pattern or a chart pattern, is only validated if it played out. You could see a bullish engulfing, meaning you could see with a candlestick pattern, you could see a small bearish candle, and then the next candle be a large bullish candle, and you're like, oh, that's a bullish engulfing. Okay. Yeah, but the bullish engulfing tells you that price is then supposed to go up next, right? So you have to wait for that third candle to see, did price go up? Okay. Then you enter on the fourth candle. Okay? Don't let that go over your head. So it's the same thing with these chart patterns. I use chart pattern. I pay attention to those because I understand that it's not validated unless it played out. So when this broke the support, the shoulders, the neckline, whatever you choose to call it, when it broke that on Monday, or Tuesday, I should say, it was like, oh, pattern validated. It formed a head and shoulder. Here was the left shoulder. The head was up here. The left shoulder was here. And this was the support, the 162. So when it broke it on Tuesday, the pattern was validated. If it continued to hold it, then that was when we were saying that we were going to flip it, because we were already looking to see if price was going to come and hold here. And if it did, what did we say? Oh, it's going to double bottom its way back up to a retest. Right? Again, it only would have been validated if it broke the neckline, if it would have did a double bottom. So don't lean too much. You gotta pay attention to that part of it. So that, to me, target is a pretty simple one. That one's pretty simple. It's just starting a bearish crossover with MACD. You just starting to get that bearish crossover come in, and it hasn't even done it, but it's kissing it. So I should say that. That's T. It's kissing it. Not beneath it yet. And please remember that the colors are over here, so you don't have to worry too much. The blue is on top of the price is still above momentum, the signal line, right? But and RSI, there was a bearish crossover here, and that's the week it broke that trend line. Still dropping, but it's not below 50. Still not below 50 yet. So we know that we do need a trend line retest. So let's see if our averages help support that in any way. Because it broke the neckline of the head and shoulder, and it did a bearish drop. But for 2 weeks, it's been beneath that trend line without a pullback. So, that's my Braxton T. Hartnebrig. If you know, you know. At this point, I think I need a new desk. I don't know, because this is the third new Magic Mouse that I have bought, and it's still not working, so it has to be the desk. Girl math. All right, so y'all know how my charts is laid out. The yellow is my 20 MA. That's the 20 MA on the weekly, child. That's where it held that. So what we're going to do is we're going to... I don't want to add another line on my chart, but got to do what I got to do. I'm going to go ahead and put a level at the 20 MA on the weekly, which is at 155.10. It cannot be that hard. Get up there. 155.16, close enough for me. Okay. And yeah, I'll go ahead and leave that one, and I'm going to turn it green. That's that range. That's that range that we're in. Yes, child. So absolutely, we want to, for continued move down, we do want to see price pull back up a little bit, give us that high. But I'm absolutely looking to see if target breaks below 155.10. All right, that's where you're going to want to re-enter if you're not already in the swing when I told you to get in it last week. That's all right. You'll want to do that. That also would make a really good day trade too. if you caught that. All right, so that was Target. Next up, we have Mara. Sleep on me. I don't know how to be humble when it comes to these charts. I just don't. All right, y'all. It did just that. We wanted that pullback and to watch to see if it was going to hold the 1769. Listen. When it did this gap down, and I posted it in the Discord, if you're watching this recording on YouTube, make sure that you click the link in the descriptions and join the Family Reunion Discord. But y'all know that when it gapped down on Monday and it held this trend line, I said, oh shoot, I think it's going to start the 3 gap down pattern. So Tuesday, when it gapped down beneath it, again, beautifully rejected that trend line. We already knew we had this 20 or this 200 MA here at 16. That was a beautiful target. It was a simple target. It was calculated. There was no emotion to it. Reject a trend line, traded down to 16. Beautiful. If you held, I exited earlier because I was trying to enter into calls for the reverse, right? So I did exit a little bit earlier, but if you did hold on to it to that level, the contracts ran over 150% for an overnight swing, I believe, because as we see, it definitely gapped down again, but it started the reversal on the 4th candle. We love the 3 gap down pattern, and if you don't know what I'm talking about, it is called the Sanku pattern. I was about to say I'll edit this video and put it on the screen, but let's be real. I'll put it in the comments. I'll put it in the description. Just type in 3 gap down pattern, y'all. But held the 200 MA, we got a morning star, as you see, because it gapped down below the bearish candle. Come on, Alexandria, you knew that. Held it Thursday, boom, 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 Friday. All right, so we are back in the same range, okay? So this is pretty much the same thing as when we were talking about Oracle. We're back in the same range at this 1769. We got into calls last week. If you're looking for your re-entry, I'm just gonna go ahead and say safety is gonna be above. I know you're not gonna want to hear this. I know you don't want to hear this. I know you don't want to hear this. Safety is gonna be above 1970. I know you're not gonna want to hear this, but listen. How can I nicely say this? Maybe you should listen, because that's why you're watching my video on a Sunday night. Wait till that cross 1970 if you missed the entry. And no, I have nothing to say about it at all. Ugly. Nothing to say about it at all. CAVA. Why y'all didn't get in? I caught that. Even said that if it break over there, we're going to want this pullback back inside this zone and it blasts back up. I didn't think it was going to do it in a week. Come up, already pulled back on Monday, got the break on Tuesday, pulled back and held it Wednesday, Thursday, bounced back up Friday. Here we go. Hey, y'all. That was a very quick break and retest. I would like to have seen it, and it will be done on a higher time frame because that's just barely a close above it on the weekly. That it just barely made a new high. Right? Because previous all-time high was 71.60. And this week it closed. Well, previous all-time high close actually was 70. So yeah, it did. Last week it closed at 72.17. But the high, y'all know what I'm saying. The high that it made. Just wait for it to break the week or the high of this previous week. Blast off because it just now did it. Now, if it pulls back into the same range again, you shouldn't want to get puts on this at all because it's just going against trend. The momentum is to the upside. Look at RSI. And that's what we have there. So now we will go in to this week's tickers. Child, I'll be back. Brief intermission. All right, so y'all already know that I'm going to start off by looking at the sector ETFs on the weekly and look for the most beautiful setup. And I went ahead and I already ordered them out for what I'm looking at. And baby, at the top of my list is XLE. Last week, out of all of the sectors closed bullish except the energy sector. I love me a good pullback from this all-time high. Well, almost all-time high. It's a 52-week high. Love it. Okay. Now, you didn't have to break the trend line necessarily, but that's okay. It's just returning to average down here. So I'm going to actually, as far as swing trade, right? Ooh, we're here for swing trade. I'm looking to see what price does at 89, right here at 89. I'd love to see it hold it and then work its way back up towards 94.66, 95, and then break back inside of the trend line and work its way to the all-time high there. Hoping that this was the first pullback, making this higher low from January 2024. It's a beautiful trend line that we've had there. So now if we do indeed break below 89, I'm not quite sure if I'm interested in shorting it down towards 83.75. I think I'll just need to see the conditions, look at the volume, level 2, like things more so like that. And I'd actually be very surprised because here on the daily, we have that 200 MA right there. That 200 MA is right there. It's more so at the 88. Y'all know I'm rounding up to a whole number, okay? It's more so at 88. I'd be surprised if we don't hold the 200 MA and at least get a pullback to the trend line there. So I'm not too interested in shorting it below that, below this 200. I know that might sound weird, but I'd want to see it play out. Definitely see what it looked like on the weekly. So XLE is at the energy sector is at the top of my focus. So the tickers that I have on there, I looked at XOK. I said, excuse me. With rising volume, excuse me? Was that an inside bar? And then last week we got a hammer that's closing above the 20 MA. On the weekly, it makes me think that the tech sector is going to lead the market coming up. We'll see. Because Amazon, what do you do? Oh, Amazon not even in the tech sector. Moving on. All right, so the financial sector. The financial sector did actually, now that I'm thinking about it, it did actually have a bearish week, not like the energy sector did, y'all. Clearly, as you can see, it really, honestly, truly just consolidated here. But I'm curious. This is just something that I'm watching. We do have this resistance level here from, oh snap, hold on. It's the trend lines for me, y'all. Now, I know. It's Alexandria. It's not charted. I know. Don't beat me up. Let me chart it real quick. It's just as simple as finding the most recent high, the most recent low, and then finding where price pulled back. I know I'm saying it's like, it's just that simple, and y'all are like, but muscle memory, it will become just that simple. Sorry if these lines are too dark, turn the brightness up on your screen. All right, so we do have a previous gap here from February 2024, right? This level that we just marked off down here. I love to see it. I'm gonna go ahead and bring that down there, right? I love that. So, and that 100 moving average is right there below it. So I wouldn't mind seeing a break below 40 on XLF to see if it holds this 39.56. Because if it does hold this, y'all see what I'm playing out in my head? I'm like, oh, that'd be a double bottom hold down there in that demand zone, right? Go ahead and break down here, hold the 100 and move back here. I'm going to start to look at JPM and Morgan Stanley. We'll start to look at those a little bit closely, and I will show you those setups after we finish looking here at the sector ETFs. Then the communication services sector. Child, to be honest, the only reason that this is on my watch list right now is because Amazon. I'm still in my Amazon swing and I need to get it together. Get it together. All right. I don't like that the volume decreased. Okay. It's holding the 20 MA. Okay. All right. Now. All right. Now this bearish volume these 2 weeks when it was pulling back was lower though. So let me not sleep on that. Let me not sleep on that. So I definitely want to see XLC break above 83 to make and then have Amazon break this 185. Jeez, please. All right, and then the last was the healthcare sector. Love to see it. That's a head and shoulder forming. All right, we got us a nice, beautiful head and shoulder pattern forming. Again, it's not validated until it breaks it, right? It's not validated until it does it. So this is that same setup, right? At this 137. I want to see a break or a hold at 137, meaning that I'm going to need to see a high probable candlestick pattern with like 2 days of confirmation, child. Okay, if it was going to hold the 137. And then I'm actually definitely XLV. I do like to trade options on, so we're going to, that is the swing setup right there. I just told you, but I will definitely let this come back down. I'm definitely buying healthcare stocks. That will be buy the dip, literally. So these stocks that are already in my portfolio, I'm not just gonna go pick a random stock and be like, oh, let me get Pfizer. You know, I'm going to do my due diligence, but the ones that are already in my portfolio, yes, I will be looking to buy said dip. So we have this trend line here, and plus this is a bear flag. Fun little tip, little nugget. The right shoulder of a head and shoulder should look like a bear flag. Oh, snap. So anytime that you see a bear flag, broaden your horizon a little bit and see if that's not in fact a longer term head and shoulder. You heard it here first. Unless you saw it on another video, you still heard it here first. All right, so we have the left shoulder, the head, which is also a double top, right? But we're just gonna, if I was on the weekly, we're just gonna say head. And then here, you see right there, it's holding that 141.66. Continue to reject that and give it on down here. So XLV, I love to trade it on the option side. I love it, I love it, I love it. The premiums are affordable. It moves beautifully. Sometimes the spread is a little wide. So if you do get a contract that has a wide spread, sell it in the morning. Jesus. It's like y'all think y'all Ray J and you got one wish left. You gonna spend that one wish putting it in the market. Don't do it. All right, so we go to the weekly. You see that. Like, look at all them upper wicks. Doesn't really want to be up there. So I'm waiting on a trend line break for a move down to the 136 and to see if we hold that, right? And if the market holds, we go back to the energy sector. Exxon, you will give me my money back. You will give me my money back because I'm sick of spending $74 at the pump. All right, so we really already did the analysis for this chart simply because we looked at XLE. However, let me tighten these lines. Let me tighten these levels up here. and at this resistance level or my supply zone here at the top, I see chart patterns. That was a good one. I see chart patterns. All right. So anytime that you can draw parallel trend lines, if you can draw parallel trend lines, guess what, babes? It's a flag pattern. You just narrowed it down just that quickly. It's a flag pattern. It's either, and we only have 2 flag patterns, a bull flag and a bear flag. This is why trend lines are imperative for many reasons. So that just helps you be able to narrow it down just that quickly. If you have parallel lines, it's either a bull flag or a bear flag. Pay attention to the initial trend, which here was a big old push up, all right? It was a rally. So this makes it a bull flag. So now what I'm looking for is to see if Exxon breaks out. Oh, please, please, please get this break back above 117. Baby, that's breaking back inside the primary support trend line and inside of these parallel channels. It'd be go time for me. Now, we still have RSI is in bullish territory with the price coming on back up. And look, y'all, it did the value zone holds. The value zone with the moving averages. When we use our 20 and our 50 moving average, whether it's the SMA or the EMA, when price finds support in between the 20 and the 50, that is a place where buyers are interested. All right. That is a place where I'll say traders are interested into getting into a position. And we can determine what side of the trade do we want to get in by, again, looking at the initial trend, which was a rally. So this was a buy signal. Not only is it at the demand zone, at the trend line, bull flag with a hammer, or if you want to call it a dragonfly doji, all right, holding the 50 EMA. It's a 4 for 4. My confirmation is going to be a break above 117. Fully aware that price, of course, I would want it to pull back a little bit towards this demand zone first. Wouldn't even mind if it touched it a little bit, but if it got up here, rejected some, but Exxon above 117. All right, the next thing that we had on our watch list was the technology sector. I mean, come on, y'all. All right, so that beautiful view from XLK automatically made me go and look at my watch list for my technology stocks and Micron. Chef's kiss, chef's kiss, chef's kiss. All right, so we got this break and failed retest of the all-time high here, and this was, of course, the push post earnings. All right, so we pushed down. We are making a higher low. It is making this higher low from this trend line since February of 2024. So I honestly am not interested entering back into a swing trade on Micron until it broke 120. It would have to break 120. It's here too close to this trend line for me. Now, if we do get a break below this 111, I'm looking to go ahead and, unfortunately, I'm looking to go ahead and short it down to about 107, in between 105 and 107. Now, let's turn these averages on, because our earnings report was just so good. That's why it got that big old gap up. Woo! Y'all look, it's in the value zone, holding the 50. What's the initial direction? Uptrend. But again, it is stuck in this consolidation. I'm gonna mind my business until it does it, but it's a beautiful setup. Just because I'm calling it, I'm analyzing it on the watch list right now, is because I'm putting it on the list to watch it for it to break. I'm not entering into it on Monday. I see the setup. It's a beautiful setup. Either way it goes, whether it breaks below the 110 or if it breaks, shoot, I ain't gonna hold you. Let this break. Do as I say, not as I do. All right. And so after XLK, we had the financial sector. So we can go ahead and look at JP Morgan, because like we already said, we wanted that pull back down. I mean, and it just looks just as messy. It honestly looks just as messy. So I'm more so JP, and let me go back to XLF. You see it's the same, it's looks like the same gosh darn chart. So I am watching the financial sector XLF to look for that pullback, and then that will make me want to pull up JP Morgan then. And then after, I think the last one that we saw, oh, we had two more. The communication services. This one is so simple, y'all. So Amazon, because I know that y'all want to rush into Amazon because you have FOMO. If you insist. Come on now. This is what I like to call a bee sting. I'm going to show you what I like to call a bee sting. So rounding bottoms, they have like a distinctive mark to them. Besides the fact that it's rounding at the bottom. It's not just going straight down, it rounds, it curves, right? A rounding bottom is very bullish. It looks like a little cup. So whether you call it a rounding bottom or a cup and handle, whatever. But it has something very, it's a bee sting, okay? Now, typically, and this is why it's subjective, when you get into the rounding bottom, cup and handle, child is going to round its bottom on up, and then you will see a pullback. All right? Rounding bottom, cup and handle, whatever you want to call it. You'll see a pullback. You'll see a pullback. So I absolutely want to see Amazon pull back towards the 180 range, which is exactly what we were saying when we were looking at XLC. And then I think that would be a beautiful place. Like if this holds anywhere between 180 to 183, to push back into the 188.70 and possibly into the all-time high in there. So we got the round, okay, rounding bottom. And then we want to see this. And so what will this end up looking like? If it's pulling back in parallel channels after this rally, it will look like a bull flag. Okay. Know what you expect to see. It becomes easier to spot it when it's there. Huge proponent of that. Healthcare sector, didn't actually really see anything in there that I wanted to trade. That was more so something that I was looking at. And that's my watch list right there because, baby, y'all still got the 6 tickers from last week that you should be in. But you have re-entries for this week if you did not catch it last week. And we know the sectors that have beautiful setups with their leading holdings. That will show us where we can go. So make sure that y'all are subscribed because y'all got me to 1,000 followers. What? My family's so big. My family is so loved. Welcome home, y'all. I don't know. That was lame, but I have nothing to say. I'm just very honored. So thank y'all for continuing to watch and all of the support. And make sure that you hit like, subscribe, and all that other good stuff. And I'll see y'all at the